Hey everyone, this is June from Turning Point Life Investment, and this is your market analysis for the week ending in August 15th, 2009. Starting with a 3-year weekly view of SPY. You notice this week, price-wise, has pretty much gone nowhere. We pretty much started on Monday and ended on Friday, relatively the same level, price level. As far as candlestick, we produce another small body candlestick, telling me that there's really no one party in charge. Neither the Bulls nor the Bears really took position this week. Other than that, there's really not a whole lot to say about the weekly view. Pretty much the same as last week. So going straight into the 6-month daily view, you can see again prices have been pretty much churning sideways, going sideways, consolidating. In my mind, I think the market is already correcting itself. You can see how it's allowing itself to come out of this overbought situation. So it's no longer overbought, right? And also notice the MACD is no longer diverging. It's actually going back to neutral or back to zero. One thing you want to notice, I keep mentioning, every time the prices get pushed away from this 20-day moving average, just like here and here, it always has to come back towards it. And it seems like there's the 20-day is actually catching up towards the prices. So you can see we're no longer in that extreme condition anymore. We're not really extremely away from the moving average. We're not overbought and we're not diverging as much as we used to. So in some sense, don't be surprised if this is all we're going to get as far as the correction. Not until support is broken will I think otherwise. 99.50, give or take, has been acting as pretty strong support. You notice every time that prices dipped around that area, buyers came back in to buy it. So that area has been holding up pretty well. If broken, okay, if it does get broken, I would say next support area is somewhere around this 97-ish area. You can see how there's a gap right there. So more than likely that gap might get retested only if 99.50 gets broken. And as far as upside, we know that 102 is the previous resistance. It's the previous high. If that gets broken above, then we looked last week that 105 is a pretty good target since there was a pretty huge gap right there. Next, let's go into the VIX. Really, same story, right? You look at the VIX and it's going sideways. So it's really telling me a whole lot of nothing. It's still using this 50-day moving average as pretty strong resistance. Again, not until it's able to break above it, then maybe we can get a little more volatility into the market. And usually increased volatility means a decline for the market. But overall, even the VIX, as far as trader sentiment wise, it's not really telling me a whole lot. So overall, going back just to recap, I know this is going to be a pretty short video only because, well, the market hasn't really done much for me to say anything. Just watch for that support level. 99.50 is a pretty key support level. If broken, watch for this gap. That could be the possible pullback area if that is broken. Otherwise, okay, like I said, don't be surprised if this is all we're going to get as far as correction. So watch for the 102. If broken, I would say if it closes above 102, that would be even better. Then 105 would be a very likely target. Maybe not next week, but in the long run. So overall, as far as market, just continue buying the dips. That seems to be what's working right now. And that's what traders are continuing to do. Continue to buy the dips until proven wrong.